All right, so you're ready to really decode the world of share trading? That's awesome. We're going to be diving into 4 different approaches today: day trading, swing trading, position trading, and scalping.
Whether you're picturing yourself out there, making these lightning fast decisions or kind of taking more of that long view, we're going to break down each style
Yeah.
and help you figure out which one might resonate best with your goals and even, believe it or not, your personality.
Oh, I like that. I think that's a really good point. And maybe we can even touch on that a little bit later.
Yeah, you might be surprised how much trading styles can reflect those individual approaches to risk and decision making.
Mm-hmm.
It's a little bit like, choosing a dance style. Are you drawn to that uh, high energy bursts of salsa or maybe more of the elegant flow of waltz?
I love that analogy.
Right.
Okay, so let's get started with what's often considered the most intense style: day trading.
Yeah.
We're talking about buying and selling shares within the same day,
Hmm.
trying to ride those tiny price waves for those, quick wins.
Exactly. Imagine playing chess against a supercomputer. That's kind of what day trading feels like. You need to think multiple steps ahead, anticipate those market movements, and really react in a split second.
Wow.
Day traders, they really live and breathe technical analysis,
Okay.
which means they're constantly studying charts, patterns, and these indicators like moving averages to try to predict where the price might go next.
So it's not just about gut feeling then. There's some serious research and analysis involved.
Absolutely. A successful day trader might use something called a moving average crossover to signal a potential buy or sell point.
Okay.
So let's say you see a short-term moving average crossing above a long-term moving average. That could indicate an upward trend
Okay.
and a good time to buy. Of course, there are tons of other indicators and strategies, but the key is to use them to gain that edge in predicting those price movements.
Wow. It sounds intense, but also kind of exhilarating. What kind of person thrives in that environment?
It takes a certain kind of personality to handle that constant pressure and those rapid-fire decisions.
Yeah.
Successful day traders are often analytical,
Mm-hmm.
disciplined, and able to detach emotionally from the trades. They have a high-risk tolerance, but they also understand that every trade is a calculated risk, not a gamble.
Right. I'm getting the sense that day trading is not for the faint of heart.
Oh.
What about the potential rewards? What's the upside of all this intensity?
Well, the allure really is that potential for those quick profits.
Okay.
You could see returns within hours or even minutes.
Wow.
And because positions are closed out each day, you're not exposed to the overnight risk of the market kind of shifting while you sleep.
Right. Okay.
However, the flip side is that losses can also be swift.
Yeah.
And
Right.
that's why risk management is so important.
Absolutely.
Knowing when to cut losses is just as important as knowing when to ride a winning trade.
Okay, so maybe day trading is like that high intensity interval training workout, not for everyone.
Yeah,
But some people thrive on that fast paced energy.
exactly. Now, let's move to something a bit more laid back, shall we? Imagine catching those medium-sized waves instead of constantly riding the choppy surface.
Yeah, okay.
That's the world of swing trading.
Okay, swing trading, yeah. Oh, it does sound a bit more my speed. What's the basic idea here?
So swing traders aim to capture those price swings that happen over a few days or even weeks.
Okay.
They're looking for those mini trends, those opportunities where the market might move 5%, 10%, or even more in a relatively short period.
So less about those split-second decisions and more about spotting those short-term trends.
Precisely. And while technical analysis is still important, swing traders often incorporate fundamental analysis as well.
Oh, okay.
They might look at a company's earnings reports, news events, or industry trends to try to identify stocks that are poised for a short-term surge.
So instead of just looking at charts, they're actually digging into the company's story, what's driving its performance.
Yes. For example, let's say a swing trader notices that a tech company is about to release a highly anticipated new product. They might buy shares in anticipation of that release, hoping to ride the wave of positive market sentiment
Makes sense.
and potentially sell for a profit when the price goes up.
That makes sense. What about the time commitment? Is swing trading as demanding as day trading?
No, swing trading is definitely more flexible. You don't need to be glued to your screen all day.
Mhm.
Instead of watching every tick, you're looking for those broader price swings that play out over days or weeks.
Right.
You might spend an hour or two a day researching and monitoring your positions, but it doesn't require that constant intense focus of day trading.
Okay, that sounds appealing. A bit more balance between staying engaged with the market and having time for, well, life. What are some other perks of swing trading?
Well, one big advantage is that you can potentially ride those larger price swings for bigger profits than you might see in day trading.
Okay.
Of course, the risk is also higher, but the potential reward is greater as well.
So it's a bit of a step up in terms of risk and potential reward compared to day trading.
Exactly.
What kind of personality do you think gravitates towards swing trading?
Swing traders often have a bit more patience than day traders.
Yeah.
They're comfortable with a bit more uncertainty and are willing to let their trades play out over a longer period.
Yeah.
They're also good at identifying trends and spotting those opportunities that others might miss.
All right, we've covered the adrenaline rush of day trading and the more measured approach of swing trading.
Right.
Now, I'm curious about the long game.
Mhm.
Position trading, is that where we're headed next?
You got it. Now we're talking about riding those long, slow waves in the market.
Right.
This is for those who believe in the power of time and compound growth.
Okay, yeah.
Think weeks, months, or even years holding on to those shares.
Okay, I can already feel my blood pressure dropping just thinking about it. Tell me more about what makes position trading unique.
So position trading is all about identifying those companies that are really poised for long-term growth. Think of it like planting a seed and watching it grow into a mighty oak tree. It takes time, patience, and, a belief in that underlying strength of that seed.
So, less about trying to time the market and more about finding those companies that are built to last.
Exactly. Position traders are like those meticulous gardeners, carefully nurturing their investments over time. They're really digging deep into a company's financials, analyzing things like revenue growth, profit margins, and debt levels. They're looking for those indicators of a healthy and sustainable business, one that's likely to appreciate in value over that long haul.
It sounds a lot more like detective work than just picking stocks based on headlines.
It definitely requires a different mindset. Imagine, poring over a company's annual report, studying its management team, and researching its competitive landscape. That's the world of a position trader.
Okay, so if I'm picturing this right, a position trader might look at a company like, say, a renewable energy company that's developing cutting-edge technology. They see the potential for growth in that sector, they believe in the company's leadership, and they're willing to hold on to those shares for years as that company establishes itself as a leader.
That's a great example, and that's where that concept of compound growth comes in.
Hmm.
Think of it like a snowball rolling down a hill. It starts small, but as it gathers more snow, it grows bigger and bigger. With position trading, those initial gains get reinvested, and over time, the growth can be very significant.
Yeah, I'm starting to see the appeal. Less stress, more focus on those fundamentals, and the potential for those long-term gains to snowball. But I imagine there's still some level of risk involved, right?
Of course, no investment is entirely risk-free. Even the most promising companies can face unexpected challenges. That's why diversification is so crucial for position traders. Instead of putting all their eggs in one basket, they spread their investments across different industries, sectors, and even asset classes to mitigate that risk.
So maybe a position trader might invest in a mix of established blue chip companies, some up and coming tech companies, and maybe even some real estate or bonds to create a well-rounded portfolio.
That's a good strategy. And remember, position trading is a marathon, not a sprint. Those who succeed have that patience and discipline to ride out those market fluctuations, knowing that their investments are aligned with their long-term goals.
It's making me think of those proverbs about slow and steady winning the race. Okay, before we move on, I have to ask about this last trading style that we mentioned, scalping. You described it as the most intense of them all.
Yes, scalping is definitely in a league of its own. Imagine a hummingbird flitting from flower to flower, taking tiny sips of nectar. That's what a scalper does in the market. They're in and out of trades in seconds or minutes, aiming to profit from those minuscule price fluctuations that most traders wouldn't even notice.
So instead of riding the waves, they're skimming the surface, catching those tiny ripples.
Precisely. And they need the tools and reflexes to match. We're talking high-powered computers, lightning-fast internet connections, and a deep understanding of how to read those fleeting market signals.
Yeah, it sounds like something out of a sci-fi movie. What kind of person excels at scalping?
Scalpers thrive on that adrenaline and possess an almost superhuman ability to process information and make decisions. They're often highly technical, with a deep understanding of those market mechanics and order flow. Many rely on those automated trading systems to execute those lightning-fast trades.
It sounds incredibly demanding. Definitely not for that casual trader. But what's the appeal for those who can handle it?
Scalping is all about volume and efficiency. By executing dozens, sometimes even hundreds of trades per day, Scalpers aim to accumulate those small profits that add up to a substantial sum over time. They're essentially squeezing every ounce of opportunity out of those tiny market inefficiencies.
So they're like those expert chess players who can see 10 moves ahead. But in this case, it's all happening at warp speed.
That's a good analogy. But it's crucial to understand that scalping is extremely high risk, high reward. It requires a specific skill set, an ironclad risk management plan, and the ability to stay laser-focused under that pressure.
Okay. I think we've established that scalping is definitely for the pros, those with the nerves of steel and the skills to match. But I imagine for most people who are just starting to explore share trading, it's not the first style that they'd consider.
You're absolutely right. For those new to trading, it's essential to start with a solid foundation, understand those basics, and gradually work their way up to those more complex strategies.
All right. We've covered a lot of ground here. From that high-intensity world of day trading to the patient approach of position trading and even the mind-boggling speed of scalping, I have to admit I'm feeling a bit overwhelmed, but also excited by all the possibilities.
It's natural to feel that way. The world of trading is vast and complex, but that's also what makes it so fascinating. The key is to find the approach that aligns with your personality, risk tolerance, and ultimately, your goals.
Now that we've explored all these different styles, how does someone actually figure out which one is right for them? It feels like there's so much to consider.
That's a great question, and that's exactly what we'll dive into next. It's all about understanding yourself, your strengths and weaknesses, and how you approach risk and decision-making. Think of it like choosing a travel destination. Some people crave adventure and are drawn to the unknown, while others prefer a well-planned itinerary and those familiar comforts. Trading is similar. It's about finding that path that resonates with who you are.
Okay, I'm ready for that next step. Let's figure out how to navigate this map of trading styles and find that perfect fit. Okay, so we've explored those trading styles, from catching those quick price waves in day trading to the long, steady climb of position trading. Now I want to zoom out and talk about why this whole world of share trading is even worth exploring. Like, what's the big picture here? What makes it so appealing to so many people?
That's a great question. I think, for a lot of people, it's about the possibility, that potential to shape your own financial future, to be in control of your wealth, maybe even reach a level of freedom that seems out of reach, in a traditional career path.
Yeah, okay, that makes sense. But let's get real. We hear a lot about financial freedom, but what does that actually look like, in the context of trading? Is it just about making a ton of money?
It's definitely more than just accumulating wealth. It's about having those resources to live life on your own terms.
Okay.
Maybe it means, retiring early, traveling the world, pursuing some kind of passion project without having to worry about a paycheck, or just having that sense of security,
Yeah.
that allows you to weather any storm.
So it's about having options, flexibility, and control over your time and your choices. But it's funny, I've heard people talk about trading as almost, a form of personal development. It's not just about the money, it's about the skills and mindset that you develop along the way.
Absolutely. Think about it. When you're engaged in trading, you're constantly learning about markets, analyzing data, evaluating risk, and making those decisions.
Right.
These are really valuable skills that can translate to so many areas of life, even beyond finance.
Yeah, it's like a crash course in critical thinking, right?
Oh.
You're forced to become a student of the markets, understand economics, psychology, even a bit of history and politics. And the learning never really stops.
Exactly. It's a continuous process of learning and adapting. The markets are always evolving, which keeps you on your toes, constantly seeking that new knowledge and refining those strategies. It's a challenge for sure, but that's also part of what makes it so rewarding.
And let's not forget the flexibility that trading can offer, especially in today's world. You can literally trade from anywhere,
Right.
with an internet connection. It's not tied to a specific location or that traditional work schedule.
That's a huge draw for a lot of people, that ability to design your own work day,
Yeah.
to potentially work from anywhere in the world, to break free from that traditional 9-to-5 grind.
Right.
It's about freedom and autonomy.
Okay, so we've painted a pretty optimistic picture here, but we have to acknowledge the elephant in the room, right? Trading comes with risks too. It's not all sunshine and roses.
Of course, there's always the potential for loss in any investment.
Right.
The markets can be volatile, and there are no guarantees. But that's why education, risk management, and a disciplined approach are so crucial.
It's interesting. We talked earlier about how trading styles can reflect, personality types. I'm wondering if that extends to how people approach risk.
Hmm.
Are some people just, naturally more comfortable with risk than others?
It's fascinating, isn't it? Some
Yeah.
people are drawn to that thrill of uncertainty.
Mhm.
They embrace that volatility and see it as an opportunity.
Yeah.
Others are much more cautious. They prioritize preservation of capital, and they're more comfortable with slower, steadier growth.
And neither approach is inherently right or wrong. It's about understanding your own risk tolerance and finding a strategy that aligns with it. Maybe maybe someone who's more risk averse might gravitate towards position trading,
Hmm.
while someone who's comfortable with more volatility might find, day trading more appealing.
That's a great point. It's about aligning your trading style with that individual comfort level and financial goals.
Right.
And remember, risk tolerance can evolve over time as you gain more experience. You might find yourself becoming more or less comfortable with taking those risks.
So, as we wrap up this deep dive, I'm curious, what's one piece of advice you'd give to someone who's just starting to explore the world of trading? What's the most important thing to keep in mind?
If I had to boil it down to one thing, it would be this. Never stop learning. The markets are constantly changing. New information emerges, and there's always something new to discover. Whether you're reading books, attending those webinars, following market analysts, or simply observing and analyzing, the key is to stay curious and never stop seeking that knowledge.
I love that. A reminder that trading is a journey, not a destination. It's about continually expanding your understanding, refining your skills, and adapting to those ever-changing dynamics of the market.
As you embark on this journey, keep this in mind. How might your chosen approach to trading reflect your broader approach to risk and decision-making in other areas of life? It's an interesting question to ponder as you navigate this exciting world of share trading.